starts with understanding what minimum investment really means, because most beginners misunderstand this term. When people hear minimum investment, they think it's one fixed number, but in reality, it depends on the platform, the asset, and the type of account you're opening. Some brokers require zero minimum deposit to open an account, while others may ask for $50 or $100 to get started. Then there's the minimum required to actually buy an asset. For example, if a stock costs $300 per share, traditionally you needed $300 to buy one full share. But today, many platforms allow fractional shares, which means you can invest $5 or $10 and own a small piece of that stock. That completely changes the game. You also need to understand the difference between investing and trading. Investing focuses on long-term growth, while trading usually involves higher risk and more capital movement. So when we talk about minimum investment, we're not just talking about money, we're talking about accessibility. Technology has removed many of the barriers that once kept ordinary people out of the market. Third, the real minimum investment today is often less about dollars and more about knowledge and discipline. Focuses on the minimum required to start investing in stocks. In the past, stock investing felt exclusive. You needed a broker, paid high commissions, and often had to deposit hundreds or thousands of dollars just to begin. But today, modern investment apps have changed everything. Many platforms allow you to open an account with zero minimum deposit. More importantly, they offer fractional shares. This means if a company's stock is priced at $500 per share, you need $500. You can invest $10 or $20 and still own a portion of that company. That makes investing in major corporations possible, even for beginners with limited funds. However, just because the minimum is low doesn't mean the risk disappears. Stocks can go up and down in value daily. If you invest $10, it might become $12, or it could drop to $8. That volatility is normal. The key is understanding that stock investing should be long-term. Historically, the stock market has grown over time, despite short-term crashes. So while you can technically start with a small amount, success comes from consistency, patience, and continuing to add money regularly instead of trying to get rich overnight. About ETFs and index funds, which are considered some of the best options for beginners. ETF stands for Exchange Traded Fund. Instead of buying one single stock, an ETF allows you to buy a collection of many companies in one purchase. For example, some ETFs track the entire stock market or specific sectors like technology or healthcare. The minimum investment depends on the price of one share, which could be anywhere from $20 to a few $100s. But again, many platforms now offer fractional investing, so you can start with as little as $10. The reason ETFs are powerful is diversification. When you buy one stock, your risk depends on that company. When you buy an ETF, your risk is spread across many companies. That reduces the impact if one company performs poorly. Index funds operate similarly, but are often associated with long-term passive investing strategies. They usually have low fees and are designed to match market performance instead of trying to beat it. For beginners who want simple, steady growth without constantly analyzing stocks, ETFs and index funds offer a low minimum entry point and a strong long-term foundation. Explores minimum investment in cryptocurrency. Crypto is known for being accessible because many exchanges allow you to start with as little as $1 or $5. You need to buy a whole Bitcoin, which may cost tens of thousands of dollars. You can buy a fraction of it. That makes crypto appealing to young investors and beginners. However, low minimum investment does not mean low risk. Cryptocurrency markets are extremely volatile. Prices can rise or fall dramatically in a single day. A $20 investment could double quickly, but it could also lose half its value just as fast. This is why research and risk management are essential. You should never invest money in crypto that you cannot afford to lose. Another important factor is security. Choosing a reputable exchange and using secure wallets helps protect your assets. While crypto offers one of the lowest barriers to entry in terms of money, it requires higher awareness and emotional control. Few approach it carefully and treat it as part of a diversified portfolio rather than your entire strategy. Even small investments can become meaningful over time. Discusses real estate investing and its minimum requirements. Traditional real estate usually requires significant capital. Buying a physical property often demands a down payment of thousands of dollars, plus closing costs, maintenance, and ongoing expenses. That makes it difficult for beginners with limited funds. However, modern investment tools have created alternatives. One popular option is REITs, or real estate investment trusts. REITs allow you to invest in real estate properties without directly owning them. You can buy shares of a REIT just like you buy stocks, and some require only the price of a single share to start. This can be as low as $20 or less on certain platforms. There are also real estate crowdfunding platforms that pool money from multiple investors to fund larger projects. These may require minimums ranging from $100 to several $100s. The key takeaway is that while traditional real estate has high entry costs, indirect real estate investing has much lower minimums today. That gives beginners exposure to property markets without needing massive capital or managing tenants and repairs themselves. Focuses on starting a business as a form of investment. Many people forget that investing doesn't only mean buying stocks or crypto. The minimum investment to start a business varies widely. Video editing or social media management with almost no startup costs beyond internet access and basic tools. Dropshipping businesses can be launched with a few $100s for website setup and marketing. Content creation on platforms like YouTube may require just a smartphone to begin. 2. The real investment in a business is often time, effort, and consistency rather than large amounts of money. Income is not guaranteed, especially in the beginning. But for some people, starting a business offers unlimited upside compared to traditional investing. The right amount depends on your income, expenses, and financial stability. That protects you from unexpected events like job loss or medical bills. Once you have that foundation, you can start investing small amounts regularly. A common budgeting approach is the 50-30-20th rule, where 20% of your income goes toward savings and investments. Covers common mistakes beginners make when thinking about minimum investment. The first mistake is waiting too long. Many people delay investing because they believe their amount is too small to matter. But small investments grow over time. The second mistake is chasing quick profits. When beginners see stories of people doubling their money quickly, they take unnecessary risks. Investing is not gambling. It requires patience and strategy. Another mistake is ignoring fees. Even small fees can reduce returns over many years. Always understand the cost structure of the platform or fund you're using. Emotional investing is another major error. Fear during market drops and greed during market highs can lead to poor decisions. Lastly, many beginners fail to diversify. Putting all your money into one stock or one cryptocurrency increases risk dramatically. Avoiding these mistakes is just as important as knowing the minimum amount required to start. Investing is simple, but it's not always easy. Discipline, education, and consistency matter more than how much money you begin with. A myth that keeps too many people on the sidelines. The consistency does, the patience does. Every successful investor you've ever heard of started somewhere, and none of them began with perfect timing or perfect knowledge. They started with a decision. If you take one thing away from this video, let it be this. Stop waiting for more money and start building with what you have. Nat, I want to hear from you. Thor, how much are you planning to start investing with? Drop it in the comments and commit to it. If this video gave you clarity and confidence, I'm going to show you exactly how to invest your first $100 step by step. Your financial future doesn't start someday. It starts today.